$2 trillion valuation is what Mohammed bin Salman wants for Aramco. I'm hearing 1.5. How difficult or how important is it to get this valuation up to the upper echelons towards $2 trillion?
Well, I think it's been a goal, but it's also important to get this incredibly important IPO done well, and that the aftermarket is positive. So that's, I guess, the tension and what the bankers are working on.
It's going to be. Do you think it's going to be difficult to get up towards that $2 trillion? What are you hearing?
Well, I'm hearing 1.5 to 2, based on the 75 billion dividend that has been indicated, and I think that's I guess the range, and finding the right spot in that range is going to be pretty important.
Okay, well said. That never a truer word said. There's a bit of a gap there, $500 billion. Can we talk about inclusion? JP Morgan yesterday said inclusion for Saudi Arabia in the MSCI was a defining moment. It was a pivotal moment. Would you agree, and is that reflected in your business?
Well, I think it's part of the whole reform agenda here. So being included in the MSCI, I think, led to about 20 billion of index-related flows into the market here, which was obviously a positive development. I think that post-Aramco, there's going to be an increase in the weighting in the index. That's going to be positive. But I would see that more broadly in the context of the major reform agenda here. It's a part of it. It's a measure of it, or a reflection of it. The key thing is the reforms being made in this country, and every time you come here, you see further development along that road, which I think is very impressive.
But what does it take to get the active money in after the passive? Because, I mean, this market, I think when we were chatting in the break, you said, man, it's still quite expensive.
Well, I think valuations are reasonably high. I think the range of opportunities is relatively narrow, but Aramco is just one privatization in a series, and as that develops, then the market broadens out and international investors will become more interested.
The top story this morning is, of course, election in the UK. We are going to the polls again. Give me your assessment of the risks therein as we go to the election. Donald Tusk warned, use the time wisely, because it could be your last
Whatever
extension.
that means.
Well, whatever that means. So your take this morning on election risk in the UK?
Well, like everything else in politics around the world today, we're in uncharted territory. So this is the third election in less than 5 years, which is incredibly unusual, added to which we've had a referendum. So we've had 4 major votes since 2015. People don't like that. I think Johnson had no choice. His whole government was stymied by the situation in the House of Commons, so he had to do this. But there are risks, and I think it's quite unpredictable.
What's the biggest risk, as you talk to your colleagues, what's the biggest risk now as you go into this vortex?
Probably the biggest risk is he ends up where he was before, in a hung parliament. I mean, there are 150 marginal seats, which are very hard to predict. There may be quite a lot of tactical voting. People don't like being forced into yet another election, particularly, I think, in December. So it's unpredictable. I mean, and if the polls are saying a Conservative majority, I think it's far too soon to say, basically.
Everybody says to me, hard Brexit is off the table. Hard Brexit is off the table until the 31st of January is one's interpretation of it. But hard Brexit is not dead if we're in an election mode again after the 31st.
I think it's highly unlikely. Johnson got a deal. It was approved by Parliament, ironically. Yes. That, I think, will be...
You think that'll stand through?
I think that's the deal that's going to, in the end, probably get through.
From an investment point of view, Mark Carney, again, with Francine a couple of weeks ago at the IMF, said if we get a transition and a constructed deal with process and due diligence, investment will return quite substantially to the UK. Can you envisage that? When you talk to clients, are they primed to re-engage capital with the UK?
Absolutely. I think what is really causing a problem is this neither in nor out situation. This has gone on too long, and people want certainty. And I think if we can get that or something like it over the line, then people will be able to look forward, make plans,
yes,
invest, both in the short term and take a longer term view. So I think both in Europe and in the UK there is a sense of exhaustion with this process, and people want to see it done.
And there are other political risks coming to bear in the world next year. We go into an election cycle in the United States of America. We had the Mubadala head here yesterday, Khaldun al-Mubarak, saying, I'm selling assets. He's getting ready for something in the long grass that might come. Ray Dalio says we're in a scary place. Are you getting a sense that investors are becoming more defensive? What can you tell me about the flow of money or the conversations?
Well, there is a lot of money on the sidelines, and retail investors have been pulling money out this year.
Yeah.
So I think everyone can see, and Ray Dalio listed I think it's 5 major risks, so people can see that. But having said that, the market's at an all-time high in the US. I think we're looking at we're not looking at recession in our view. We're looking at low growth, low inflation, this environment continuing. And within that, some companies will do extremely well. And since you have virtually zero yields on bonds, in some cases negative yields, I think that investors will still look to equity markets to generate the returns they need. So, yes, there are risks, but our expectation is a low growth, low inflation, low interest rate environment will persist for some time. And within that, some companies, as they have been, will continue to do very well and drive revenue growth.
Michael, we can't cover everything that happened with the Woodford Fund and with H2O in the space of a minute, but I want to get a sense from you. How defining a moment has it been for our markets and regulation? What have you learned or taken away from the Woodford saga and from H2O this year in terms of regulation?
I think that Woodford was an idiosyncratic event. There are very few daily trading unit trusts in the UK which have very high proportions of unquoted situations for obvious reasons. So I think a read across from that to say, therefore active management is called into question, therefore daily trading mutual funds are called into question, I think is wrong. I think this was obviously a very important, very unfortunate event, but I think it was, as I say, idiosyncratic. And I wouldn't read across from that. I think, unfortunately, this was allowed to balloon and get too far before it was picked up.
Yep.
But it happened, and one has to learn from that. But I don't think there's a read across to say the industry itself is challenged or active managers are challenged. I wouldn't take that takeaway from that at all.